Taiwan is up on your screen. That one has also moved up moved up even higher in the past couple of minutes. So that one over 1% higher.
Wherein Singtel, which owns close to 13.5% stake, is going to sell a 3.3% stake in Bharti Airtel.
Why the market's looking bullish is because the Bank Nifty has got its mojo back. When the market-leading sector starts to do well, bulls feel good about the market.
80 points now, so looking pretty solid and pretty good out there.
Our broad view is that the construct for India is looking great. I mean, inflation, we think for the month itself will come around 6 and it is trending lower.
The company says that the Adani deal for their founder firms needs SEBI's nod, as the founders are barred from transactions.
We're still very, very confident that we'll be able to resolve it and potentially get an approval by the end of the fourth quarter.
For RBL, there was a disclosure last evening that college retirement fund did buy 45 lakh shares, investing close to 50 crores in RBL Bank.
They say that they will implement one nation, one fertilizer rule by introducing single brand for all the fertilizers, be it private sector or public companies like RCF, NFL, etc. The markets, they continue to edge higher, up around 98 points on the Nifty as we speak.
Good afternoon and welcome to Closing Bell. I'm Anuj, with me, Prashant and Nigel. This is the last hour of what has been a truly good series for the bulls. I mean, of course, this week's volatility notwithstanding. Of course, for the week, the Nifty is still in the red. The Bank Nifty has turned comfortably in the green. In fact, it started the day with being in the green for the week and today has added more. So the point we made in the morning as well, that the Bank Nifty has got its mojo back and that's helping the bulls. The market breadth actually has been quite strong through the week, except for Monday. So all in all, looking quite good. And if you're looking at the index stocks, momentum is clearly intact. I mean, names like Eicher Motors, for example, doing well. And today, of course, even some of the select IT stocks have also made a bit of a comeback. So good going so far. Let's see what the last hour brings for us. Prashant, Nigel, hi, good afternoon.
Anuj, hi, Nigel, hi. I mean, things are coming up and coming off non-stop, right? I mean, that's been the nature of the day. It's not been just one way and the market holding on. So, for example, we are off about 50 odd points from the day's high, and there's 56 points. But the fact is, the ease with which the market traverses through 30, 40, 50 index points, I mean, has been quite remarkable. As you can see that on the chart on the Nifty. So this is the second, if this materializes, the second meaningful dip that we are seeing during the course of the day. So 17,662. Is where the Nifty finds itself at. Market breadth is positive. It's 2.5:1. About 1450 stocks are higher, and you've got about 650 stocks which are lower at this point. So broadly, the momentum very much on the upside. Nigel, hi.
Well, and momentum has been with the bulls for bulk of the series as well. So let's see what the final 60 minutes has in store. For the time being, though, let's run you through what all we have lined up. Balkrishna Industries, that's down in a rising market as few brokerages are bearish on the stock. More details coming up. Stock down 1% odd. Fertilizer stocks are in focus as the government directs all fertilizer producers to ensure 2/3 of their fertilizer bags have the centre's Bharat branding from 2nd of October. Details lined up on the show. DLF surging in trade on the back of a launch pipeline of 35 million square feet over the next few years. Key excerpts from the chat that we had with the management earlier today. Finally, we'll get talking all things market. Amit Gupta, Vice President and Fund Manager at ICICI Securities PMS, will be joining in.
Okay, but as always, we start the show with last hour calls. Mitesh Thakkar is joining us for that. Mitesh, hi, good afternoon. Been a good day, especially on the Bank Nifty, though off the highest point right now. What would be your call on the index and your stock calls?
Yeah, good day. Yeah, I think the Nifty also has come off the day's high a little bit and now trading below the opening point, which is not the case with the Bank Nifty. So the banking index still is outperforming. But broadly, as I said, this market isn't, getting back into the movement which it was showing a couple of weeks back, which is basically a very strong uptrend when it was continuously making new highs. I believe that we have this consolidation coming up now, and therefore, I think around 17,800 is what I was looking at. Possibly we'll see the higher end of the market, but I think today it's made a high of 17,725 and then tapered off from there. So maybe I think a few more days of consolidation will be required before we actually regain or restart the up move. For the time being, trading stock specific biases. I have a buy on Crompton. That's a stock which is broken out above the 200 average, above some consolidation. It's a buy with the stop at about 403 for targets of 435. And Canara Bank, amongst the banking names, is on the recommendation list as well. That's a buy. keep a stop below 233 actually, and look for a target of 256.
Crompton is interesting. Crompton seems to have broken out, yeah, I mean, it's a big move today. Not on too much volumes though, so we'll see how this one pans out. Prakash Devan is with us to take us through what he's making of things. Prakash, thanks very much. Good to have you with us here as always. Let's just pick on Crompton, if you will, if you cover that space. Not cheap. Some 30 times FY24 earnings for some 10% growth. Would you look at this? It's breaking out today, as Mitesh was also pointing out. Any thoughts?
Yeah, hi. Good afternoon, Prashant. So, I think it's the second order impact of the kind of move that we've seen in cap goods company. Now it kind of will start moving on to some sort of companies that straddle engineering and consumption. So this is bound to happen. And what's interesting is that Crompton has actually been very strong in terms of all the product portfolio that they've built over the last many years. They've deepened their presence and market share in all of them without probably too much of A&P cost incurrence. In fact, it's very simple for most of these consumption names to grow by spending a lot on advertisement and promotions and things. And this is one company that has done it very quietly, very effectively. So if you look at that margin profile that they've been able to improve and maintain over the last many quarters, it's fairly impressive. But yes, as you said, it is expensive. Things like this only start fetching a higher premium. The valuations are not so comfortable that you would still make some money from here on. But it's a great long-term bet that's playing out the way it was anticipated. There'll be no disappointment, especially when others like Havells and some of the other names are probably struggling because of the input price pressures. Crompton has managed to do that given its long-term arrangements with vendors and the ecosystem as a whole. So I think it's a great company in that space. But it is expensive. You pay a price because things are looking better than the others, and that's why the disparity in valuation also will probably be stuck.
Okay, Prakash, good afternoon. Would you give a second chance to RBL Bank? Worth a bet or just stay away?
Good afternoon, Anuj. So I think it's been something which needed repair, and I don't know in the first place what was terribly wrong with it, except for the fact that there were certain regulatory issues that could have probably snowballed in very simple terms, I must say. But that's been kind of clipped at that stage when nipped in the bud or whatever, and things probably could start normalizing for them. They've had certain setbacks with Bajaj Finance, the card business, probably looking at on its way out, and some of the fundraising plans would probably make sure that the balance sheet gets a bit stronger. So there are lots of triggers that we've heard of, but I wouldn't. Banking is giving such a lot of opportunities, and Anuj, you know about it. It's probably the sector to be overweight on at this point in time, and you have much to. There's point for choice actually. Even if you want smaller private sector banks, there are many which are far superior. In fact, if there is repair that you want to buy into, IDFC First is probably better than anything else at this point in time, given all the stuff that they've done. In fact, nobody believes it will do well because it's been talking about. There's been expectation around it. It hasn't happened. But that's precisely the reason why people are giving up and there's an opportunity. So RBL Bank, I would pass. A large pension fund can do it because they have a very different allocation methodology. But with scarce capital, I would look at something much more definitive.
Okay, all right. Prakash, since it's F&O, we're definitely going to be tracking the headline index, which, by the way, has slipped a little bit. But a few stocks, or one stock at least, will not be eligible for trading in the F&O market from tomorrow. That's Nippon Life AMC. And the stock is under some pressure. It's down close around 3%. It could be a technical factor at play. As of now, the total open interest is down by close around 5 lakh shares odd. That's down by close around 39% odd. Remember, there's still close around 7-8 lakh shares that are out there. So anyone's guess which way it's going to swing. If there are too many shorts in the system, maybe you'll see a bit of a pop. But for the time being, there is unwinding out there. So a technical factor is putting some pressure on Nippon Life. Prakash, any view on this one? It's at around 304 rupees odd.
Yeah, so, I've been keeping the stance very clear that all asset management businesses will keep on continue to grow in a secular trend. Timing could change a bit for each of them. but whether it's an HDFC or a UTI or a Nippon, because the growth of the industry, underlying industry, is now fairly undifferentiated for most of them. What you have to work towards or play on, if you are convinced with this industry growth, is the CAMS vehicle. So I think the CAMS management has made it amply clear in terms of what trends they have on a granular level they are seeing. And if that were to kind of continue even for the next 3, 4, 5 years, I think CAMS or any dips would probably give you that kind of a comfort of riding on whether AMC A or AMC B works. So I would look at doing it through slightly a different route, not directly through a Nippon. Though I do understand that today's technicality could give you some trading opportunities, but I'm not very adept at that part. But from a longer-term perspective, this is how I would think.
Okay, looking more at CAMS instead of any of these AMC companies. Got that, Prakash. But let's talk about the auto ancillary space with Prakash tracks very, very closely. Balkrishna Industries. In a relatively strong market, that stock is under some pressure. Few brokerages are not too upbeat on the stock. Sonia is with us to run us through all of those details. Sonia?
Well, thanks a lot for that. So Balkrishna Industries is down about 1% in a rising market. And the reason for that is that the agricultural segment to which Balkrishna Industries caters is under a lot of pressure, especially in the European region because of the challenges there. So Kotak Institutional Equities put out a note where they retain a sell on the stock. They say that the agricultural segment volumes in Europe are under pressure because of the severe drought conditions that has resulted in a lower production and hence lower demand for agricultural tires. As we know, Balkrishna Industries supplies tires to the agricultural sector, and this could put pressure on agri demand, they say. Now, agri-related demand forms 66% of the overall volume mix for Balkrishna tires, and they get 54% revenues from the European region itself, and hence their earnings could be under pressure. Kotak says there's a downside risk to the company's FY23 volume guidance of 10 to 14%. HDFC Securities as well has initiated a coverage. They have a reduced rating on the stock. They have a target price of 2,093, which is somewhere around the current market price. But they believe that the macro challenges will definitely hurt the earnings visibility of the company. Also, Balkrishna Industries margins are already at a multi-quarter low because of higher raw material costs and higher freight, logistics, etc. That could be under further pressure.
Okay, all right. Thanks a lot for that. Sonia explains why the stock is down close to 100%. Prakash, any view on some of these tire-related stocks and Balkrishna Industries in particular?
So, Nigel, Balkrishna, I don't have a view that's divergent from what Sonia shared from some of the brokerages, because it's a given. You will have this company struggle in its key pocket areas, and they are also unfortunately sitting at a point in time where they've built capacities, and those capacities had just started kind of showing the improvement. We saw the stock rally on the back of all that in the last few months, but this correction is probably going to be a bit deeper, and the best thing is to wait for some trigger. If they were to start focusing on the US market, realign themselves on the product mix to start supplying to off-roaders in the US rather than to Europe and within agri. So, those kind of things will happen. I'm sure the management would also be open to doing those things, or, proactively looking at those options. So that's the time to look at buying into it, and the bottoming out could happen. Right now, the rollovers tell you it's already 91% rolled over on the short side to the September series. So the downtrend will probably continue for some more time.
Okay, the market, by the way, has all of a sudden taken a bit of a dip. Now today's expiry as well. And of course, this is a new report in Financial Times that this student loan cancellation could really, trigger big inflation fears, and it could be $500 billion. Maybe that on margin has not helped. 17,625 is what you have on the Nifty. I think you have, if you go by the options data, because today's expiry, I think 17,600 has the highest put base. So looks like that level should be safe. It has open interest of 1 crore shares. So 17,650 now on the index for now. But let's see if sort of that level holds or not. For now, I think there's a bit of an intraday decline, which is clearly visible on the screen, and some stocks which are dragging the market now: SBI, HDFC, Kotak Mahindra Bank, ITC. But as I said, it could be purely expiry driven. As of now, Prashant, looks like maybe 17,600 should hold, going by the options data.
Oh, looks like it, Anand. So we'll see. There's 45 minutes to go for close, so things can come back very quickly. As I was saying, I mean, these moves are happening so fast on the Nifty. So before you know it, the market puts on 40-50 points. and it almost as if the dip never happened. We'll see. Already 25 points up after going absolutely flat day on day. So 17,630 is where we are at. Prakash, any thoughts at all on microfinance as a space? Names Bandhan, for example. There is Satin, Spandana, for example. Many are turning quite bullish on the space. On the other hand, there are those who say that the people right at the bottom of the pyramid are not doing that well. Of course, it's the opposing views, but if you have any views. Yeah.
No, so Prashant, I think it's logical that you would hear of opposing views for the simple reason that MFI is always a fine balance in trying to address a market that's growing because people the bottom of the pyramid need money, need credit, right? That's why you have the MFI product and the industry as a whole. The other side, if people can't repay, then you also have the baggage of bad loans. So it's always been a fine balance. From what you have, see, the good ones are so overvalued that you are ending up paying a price to book multiple at times, which would take years to justify. And that too assuming that there's a very secular linear growth for that period. So from that perspective, it is always going to be challenging to buy into these companies and make money in good times or in times where the credit cycle is looking positive. The sector has a PE re-rating of sorts. So I would look at some other NBFCs or core banking product players rather than the MFI thing. It's too narrow a pocket at this point to kind of be able to mitigate risk. And even the basket approach hasn't worked. People have tried buying all 4 or 5 companies in bits and parts and making sure that they have a geographical spread and a business model spread, but that also hasn't, to be honest, delivered. So the delta that you can create is not so high. So I would kind of watch it very keenly, but not allocate money at this point, given the fact that banks, simple PSU banks, which are turning around, even the laggards like PNB are looking so promising. So you've already seen shades of it in BOB, Canara Bank. The sparkle is there. So you probably have a better allocation there for the next couple of years.
Okay, all right. Keep an eye on the screen. We're up 35 points odd, but a far cry away from the 100 points that we saw earlier today. A couple of heavyweights. ITC, just take a look at that one. Nosedived, actually. ITC and HDFC, both of them relatively larger names. When they see a bit of a downtake, it puts some pressure on the index. HDFC, that's a larger weight in there. That as well, it's still in the green, but it's shaved up from the day's high. Perfect chart. Yeah, that's the one we're talking about, ITC as well as HDFC. Slip into a short break, come back. We'll talk all things market. Amit Gupta, Vice President and Fund Manager at ICICI Securities, PMS, will be joining in as well.
Excuse me, what will you do with your first salary?
So I would like to present my first paycheck to my father.
I'll buy a laptop for my younger brother.
I will save some money and with the rest I'll get an AC for my dad's room.
I'm going to start a life insurance policy. I think it's very important for my family's security.
Some folks dream of easy access to airport services. Some have ease of a card. Be it lounge access, meet and assist, spa services, and more. And what powers their credit and debit card is Dream Folks, India's largest airport services aggregator platform. Dream Folks.
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज देता है आपकी कार का बेस्ट प्राइस। ये प्राइस ही नहीं, सरप्राइज है। Visit olxautos.in.
Hey, I am India's first electric SUV. The rest followed. Once charged, I go the distance. My quiet presence ensures your peace of mind. The 2022 Kona Electric from Hyundai. Go electric, go Hyundai.
Welcome back. We've got the market up 40 now. So it's not done and dusted, not yet. There's still 40 minutes to go for close. Now, one space which I think has been in focus and will be over the next couple of days as well is with regards to what the government or the Ministry of Fertilizer in this case wants to do. It's issued, packaging rules for fertilizer companies saying that 2/3 of the fertilizer company's bag will use the logo of the government's fertilizer scheme, and only 1/3 will be used for fertilizer companies' own branding, logo, etc. Sonal is here to tell us more in terms of how this is going to work and what the impact could be, and if there is any feedback from companies themselves to this. Sonal.
Thanks a lot for that. Well, yes, it is an interesting move by the government where in a memo, they have told the department and the fertilizer companies as well that they will be changing the packaging rules where they will implement one nation, one fertilizer branding across all the companies, be it in the private sector or in the public sector. They are going to introduce a single brand across all the fertilizers. So, for instance, if it is DAP, urea, NPK, it will be called Bharat DAP, Bharat NPK, Bharat Urea, and so on for the other types of fertilizers. So as you said, 2/3 of the fertilizers bag will now be used with the new brand, that is the Bharat brand, and logo of the fertilizer subsidy scheme, which is announced by the government, and 1/3 of the bag will have the logo and the branding and the brand name of the company which is actually producing and selling that fertilizer. Now from 16th of September, these companies are asked not to buy the older bags. From 2nd October, they will be asked to use only new bags, and the phase out date, they have been given a time till 31st December. They can actually use old bags and can slowly phase it out. I had a lot of conversations with players both in the private and the public sector, and they are of the view that it has come as a sentiment negative because they will not be able to use complete packaging for themselves. However, in the longer run, it will not impact their business because they have market leaderships in different geographies. Their brand name is known. So in the longer term, it is not going to be such a big impact, but it has come in as a sentiment negative for the companies as a whole.
Okay, Sonal, thanks a lot for that. Prakash, any thoughts on these stocks?
Well, no, I think this is, if this gives you an opportunity to buy at lower levels, I think you should just grab it. And especially companies like Chambal, which are so dominant on the ammonia side. In fact, Chambal is the only Indian player that has a surplus that it could sell to the rest of the market. Given shortages globally and particularly in Europe for ammonia because it's gas-led, right? So it's a very clear derivative that has an advantage. So I think most fertilizer companies will continue doing well. Some of them will do exceptionally well because of the opportunity. And this bag packaging thing is good. It's just unifying or genericizing the product. So it's not really going to make a big difference on the P&L eventually. But if there is a sentiment dip, I think select companies definitely look very promising.
All right. Well, from the broader markets, Websol Energy, that's not a stock we talk about very often, but suddenly that stock has seen a sharp downtick. I'm just looking at it. I think, there were some results, I think, that came a little while back, and suddenly, in fact, yeah.
They did a preferential issue.
Okay.
I think it came last Friday, and I think we'd spoken about it on Monday.
Okay.
They're basically getting into electric vehicles.
Oh.
It's done very well. I mean, but it's.
I think the stock price has not been very electrifying, at least in this year. In this year, it's down 40% odd. I think we pull up last 12 months. In fact, it's up 35%. But I think if we put up, a chart of this year itself, I think it's down close to around 40% odd for 2022. Just thought we'll spot that one because it's falling on larger than normal volumes. But Prakash, you track the auto ancillary space very closely. Sai India Glass, Sonia had put out a piece earlier today. I as well had covered it a little bit earlier. It's at a 52-week high, not a cheap stock, trading at very hefty valuations, but it's giving you a play on autos because your glass in your car is coming from that, and there's a shortage of glass in the real estate space as well. So any view on this stock? It's not cheap at all.
Oh yeah, but it's a great business. I mean, it's already a 5-bagger in the last few years. When people thought that this was a business that was just a commodity conversion, really didn't hold so much of promise. But the fact that they started almost 70% plus market share in the OEM side gives them that kind of pricing power. And mind you, new cars is what they thrive on, right? I mean, they're not in the replacement market as much, but the architectural segment, which is also something that they are into domestically, that is something which could probably be a very significant addition in the years to come, but it'll take time. It's not something which is happening overnight. But every time other building materials get expensive, you see the shift towards glass, and as weather changes get incorporated in the design part, this will happen. But it's just expensive. But keep it on your watch list for sure. These are stocks that you buy into when things are down and out, and not specifically on the company news, but overall in the market. But right now, yes, it's done so well for itself. It's outperformed, but you end up paying slightly premium valuations if you were to look at entering at this point.
It's done well. Nigel, my apologies. You said Websol, right?
Yeah.
I mean, I was referring to the mind hears what it wants to hear. I was referring to Gensol.
Gensol, that's the one that did a lot of meats and
So there was a preference issue there at about 1,000 rupees or so, and that one is up 5%. When you mentioned I heard or it registered as Gensol, and you said the stock's not done well. So then I said
Gensol has gone one way from I think 2 digits to 4 digits.
52-week low I think was around 80. It's at 1,600 now, so that's gone like a rocket. But again, apologies. This is Gensol, which is on a preferential issue, not Websol. All right. DLF is the next one that we're talking to. We had the management with us earlier on. It sounded very, very confident, very optimistic about business prospects. Saying that they have a pipeline of 35 million square feet over the next few years, with sales potential of 47,000 crores. Their pre-sales guidance for FY23 stands at 8,000 crores, although they did kind of hint that they could do better. Listening to Ashok Tyagi, whole-time director of the company, to understand the outlook for the full year.
And obviously, internally, we are trying to do better, but what we had guided the market also was that an annual bookings target of about 8,000 crores, which is 2,000 crores a quarter. So Q1, we definitely came in on. The vacancy levels moved up from 5% to about 15%. But the 85-odd% people who were occupying, there was no rental disruption there at all, throughout even the worst days of the pandemic. The vacancy levels have begun reversing now. So I think from 15% vacancy level, we are now talking about 12% currently, and hoping to come back to that single-digit number by the end of the year. We expect a lot of interest from a lot of existing and potential players. So let's see. I mean, we'll obviously not be interested in doing something silly on the. It's not going to be an ego buy for us for sure. Just go to Ashoka Hotel. Before the next launch, we'll see the absorption pace of the current price points, and if we believe that there's a small proportion to hike it further, we'll definitely want to continue on that exercise.
Well, before we get to talking about DLF, Prakash, I want to ask you a view on that one. Pull an intraday chart of the Nifty. It's nearly 3 p.m. odd, so you're getting a bit of a move on that front. HDFC has moved lower. The Nifty Bank that was up 350 points, that's up only around 100 points odd. L&T has moved lower, and the IT pack as well, namely Infosys, has moved lower. So that's why, from trading well in the green, the Nifty has moved in the red. Fasten your seatbelts. Interesting 30 minutes coming up. We'll wait for that. But Prakash, what's your view on the real estate stocks, and particularly DLF?
So, let me get DLF out of the way before I talk on the sector. So I think it's a classic example of the big getting bigger and the stronger guys with stronger balance sheets raking in all the benefits. DLF has been a one-way move from those closer to 320 zones to almost now 380. Precisely because the PE re-rating is continually favoring them. And on this Sunday, Nigel, mind you, there's a historic event. If it goes off well, everything goes off well, it's going to actually open up a new chapter in the real estate segment in our country. The RERA strength will probably be felt once those super tech towers issues are sorted out. So that tells you that people will flock to companies which are much more well-regulated, well-governed, compliant, and that's going to fetch a premium to all of them. And that's why he's talking about a price hike. I mean, you can imagine how things are changing. You want to look at something in that segment or like-to-like comparison, look at Oberoi. Just track the early bookings. If that takes off as planned, as anticipated, I think that's a stock that will give you a very, very quick upside. It's kind of raring to go, but that's a big trigger because a lot depends on that particular pocket. And of course, you have a whole smattering of real estate names, right from, I've liked Conte Patil, there are some of these smaller names in Delhi. So all of that, yes. But right now, I think we look at the premium place, and that's where you will see some action.
Okay, but Prakash, we will let you go on that note. Thanks a lot for joining us. Just keep an eye on the market because I think this is emanating from the US futures. So intraday there is a sharp knock. I think we get delayed rate, so perhaps we won't be able to fully reflect it. But if you look at that, that's actually slipped quite a bit all of a sudden. And let me see if there's also a move on the dollar index because okay, that hasn't moved much, but the Nifty clearly has 17,600 has been broken. Whether we reclaim that or not, we'll find out. Amit Gupta is joining us. He's Vice President and Fund Manager at ICICI Securities PMS. Amit, hi, good afternoon. Thanks a lot for joining us. I'm just going through your PMS list and the top picks that you have. I wanted your view on Bajaj Finance first because that's been a rank outperformer over the last couple of months. But it's always been expensive, but even then, do you think the near-term move has been just way too fast?
Yeah, so I think if you look at the overall AUM size actually of the company now, so it is likely to be double. This is what the management is targeting. It has already moved from 1.6 lakh crores to 2.04 lakh crores now over the span of 1 year. And last year it was not able to perform because they were not so aggressive because of the NPA structure which could have come. But now the asset quality is coming better. I have seen the NNPA is around 0.5%. They are coming out with their own credit cards now. And they are going perfectly digital now in all the products and services from, I think, December onwards. So these are all the kicks. Though the valuations has always remained high in the stock, I have seen the scenario when the valuation was almost 9 times forward earnings. Now at least it is somewhere around 8 times or 7.5. This is what we are targeting now going forward. So my sense is the larger NBFCs are likely to do better now when the interest rate cycle is catching up, and because the lower NBFCs, I think they will find somewhat a problem in growing, and that is where the business will shift more towards the larger one who have a digital transformation. Second, if you look at the banking loan book, out of the overall loan book, 50% is coming from 3 segments. One is the home loan, second is SME, and the third is the NBFCs. So I think that also shows the kind of growth which can come up now in these larger NBFCs with the growth in the economy eventually. So that is why we are betting more actually on the stock now after the last long consolidation period.
Amit, any interest in these tier 2 names which are doing well? RBL, etc.?
So I think we need to give some time over there, but still I think the PSU banks can come up better because if you observe what happened in the SBI results recently, so because of the yield move, we saw the MTM losses were there because they keep more held for availability. Not till the maturity. So I think that is a trigger now because the bond yields mostly, I think the game is done. If you look at the inflation right now across the globe, it is peaking out. The commodities have declined. If you look at US, the wage inflation has come down from 4% to 3.5%. If you see the used car prices, they are tapering off. And that is where I think what is the expectation of 3.5% by December 2022. And now they are at 2.5. I don't think another 1% is going to be there in the next 4 months. That will comfort the market. And the market is looking at 2024 now, where there may be some decline of interest rates also, possibly could be so-called recessionary scenario. But we need to understand last 2 quarters, US GDP has almost remained negative. So things are happening very fast. In India, I think whatever the bond yields are there, it may be more range-bound. But the sharp move we are not expecting because it looks monsoon has a good impact on lowering the inflation now, at least the vegetable prices and all.
All right. Hi, Amit. What about FMEG stocks? Second half of this year will have that festive demand. You'll also have hopefully lower commodity cost. Do you believe the best is yet to come? If yes, any stocks you'll have exposure to?
So I tell you very interesting fact from the RBI actually. RBI does 2 kind of surveys. One is the consumer confidence survey and the other is the industrial outlook survey. So consumer confidence survey, if you see pre-pandemic, it was 100, it declined to 50 and now it is 76. That means the consumer confidence when we look at the pre-pandemic, it is still lower. but the industrial outlook is very robust. In fact, in 2021 only, it moved beyond 100, and now it is 110. So that is where I think that is the big boost now for this consumer confidence moving into the festival season. That is where I think you can see, some kind of spending. If you look at the PMI services now across the economies, it is above 55. We talk about lockdowns in China, it is above 55 there. We talk about, some kind of recessionary talk in US, it is above 55 there. In India, it is already 55, 56. So my sense is that particular people moving out, that will lead to some kind of spending more and which will help in revival of the economies. So this is where consumer discretionary, that is definitely one of the themes.
Okay, Amit, just hold on to that thought, because the market is something which now warrants our attention. It looks like a combination of expiry and also the fact that there's this move happening in the US futures. Now, I spoke about the fact that 17,600 put had the highest open interest, and immediately the market once bounced from there. But the second time when it broke, just almost like a bit of a free fall. Now, very interesting. There it is, 17,600 put. So that's for the day. Of course, today being expiry. So you're seeing quite a bit of move. 17,550. In fact, the market almost went to 17,500. And now has bounced back as well a bit. The bank Nifty is still doing well. So let's see. Amit, purely since you track the market in terms of the positioning as well, what's been your view? Because we've seen the market had sort of moved in one direction, and the positioning also had moved in one direction. Have the excesses been taken out of the market?
So I think it's, market is moving between inflation and recession very clearly. And once it has seen both the things now, I think the volatility we need to look at. So that's suggesting that markets will be more range bound now, because 18-19% of volatility suggests me that if it has been 24-28%, we need to be little, sideline. And it is also not 14%. So I think if you look at from the option writer's perspective, 18-19% is very lucrative to start writing actually the OTM options now. And I think this is where the markets have also stuck up in a range. And because the crude also is, supportive, US elections are there in the month of November. I think another 2-3 months, you may have, possibly range bound crude prices, which can lead to the range bound equity markets also, particularly the emerging markets. That is what I believe.
Anuj, US futures are still higher, right?
Just in the last few minutes they have slipped. So from maybe that
from the highs.
Yeah, from the highs.
The dollar index I'm looking, it's down 0.5%. It was actually about 108.6 or so. We were actually down 0.5%, almost 0.5%, 108.2. So this seems more local than global, although maybe there is some element of that as well, as Anuj is pointing out. Maybe indices, equity index futures have slipped a little bit from the day's highest point, but a pretty sharp move all told from the day's high, and bulk of that move, of course, coming in the last 15-20 minutes of trade. So 60 points lower now. I would still say there is still 25 minutes to go, so things could, anything is possible. 17,537 is where the index is at this point in time. Amit, any of these defense plays that you like, which are still reasonably valued, in your opinion? Do you like anything?
So singular plays have already moved up. If you look at Bharat Electronics or HAL, we have seen a substantial move over there. So valuations are now more rich. But I think you need to look at a consolidated story like Larsen now. We are quite bullish on the stock because one kind of correction it has already seen towards 1400, 1500. And I think capital goods looks obviously better when you have seen the move now in ABB and Siemens. And as I said, the industrial outlook of RBI looks much better. So when the industries are quite optimistic, I think the B2B players are likely to do much better, because it is always good as a vendor to give my materials, to the other company, which is very optimistic actually in the market. So I think this is where capital goods is likely to come back. L&T order book, if you see, it is continuously surprising now for the last 2 quarters. We saw 73,000 crore.
Some folks dream of easy access to airport services. Some have ease of a card. Be it lounge access, meet and assist, spa services, and more. And what powers their credit and debit card is Dream Folks, India's largest airport services aggregator platform. Dream Folks.
कंस्ट्रक्शन बहुत तगड़ा है।
क्या भाई साहब, जो साइट विजिट ना दिखाए 99 एकर्स बताए। घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com।
All right, 6 minutes to close. So welcome back. The market's trying to make a bit of a comeback. You were down 100 plus. We are down 86 now. Fast-moving market, fast-moving prices. Amrish, of course, is still with us. Amrish outlined why he likes Hero MotoCorp ahead of the festive season. Amrish, run us through the other many ideas that you've sort of outlined for our viewers over the last, I mean, in a way, a bit of a stock taking. What is working? Where, would you like to make any corrections? Ideas are always interesting. They're usually out of favor names. And you pick them when others don't want to, which is, I guess, the right way to do it. But if you want to, a bit of stock taking, yeah.
I think quite a few of them have done decently well. I mean, I don't think there were too many big blunders as such. I suppose the blunder would have been Alembic Pharma, which has corrected decently well. But again, at these levels, I would suggest it's a good time to average out. But the stocks which have done well, I mean, I've recommended Coal India in the past, which has done extremely well. ITC, when I think everyone was saying it's a sell, you should be looking at it. There were, enough number of jokes going around for ITC. And from there, it's given me more than 50% sort of a return. In fact, a stock like Mahindra Holidays, which I've been recommending for a while, I think that's done extremely well. I suppose this is just the beginning. I think it's got either 2 to 3 year runway from here. And I'll not really be surprised if that becomes a multi-bagger.
So Mahindra Holidays, you're saying to continue holding on to. I just want to ask my director to pull up the other couple of stocks that you mentioned, Coal India as well as ITC. In 2022 so far, those are the bigger gainers, from the Nifty pack itself. Amrish, you have made good money out here. What are the levels you're looking at on both these two stocks, Coal India as well as ITC? Those ESG concerns, the memes, all went out of the window.
Right. Absolutely.
Yeah.
In fact, I had a target of about 280 on ITC, which again, I mean, I had to revise. And now the target is 350, which I suppose, closer to that, I'll revise it to nearly 400. So I think this is one stock which I think one can continue to hold, at least from a foreseeable 1.5 to 2 years perspective. Something like a Coal India, possibly, I mean, I will at least book out to a certain extent, once I see levels of about 350, 360 or so.
And Mahindra Holidays, hold on, right?
Mahindra Holidays, I think, hold on, because I see this as a multi-bagger, because that big story should start playing out in the next year and a half or two. And like I said earlier, the big story is going to be those resorts becoming free, absolutely free for them.
Okay.
And they will start selling those subscriptions for the next 25 years. Because, the subscription period is 25 years, and that's getting over for the first resort. And after this, every year you'll have enough number of resorts coming up which will become free.
Amrish, just quickly, Coal India, you said you'll book out some positions, but the broader trend for Coal India is what? I mean, what is the ultimate target you have for it?
It's about like levels of about 350, but then I'll start booking out possibly at about 250, 260 levels.
All right, Amrish, thanks a lot for joining us. Have a good evening. Mitesh will thank you as well. Talk to you tomorrow, of course. Let's now start wrapping up the market action for the day. The Nifty is down about 100 points, but that's half the story. From the highest point, the Nifty slipped well over 200 points. The Bank Nifty from the highest point slipped well over 500 points. The point I keep repeating, the last hour is the most important hour for the market, because the market's vulnerable to these kind of moves on both sides. In terms of stocks which drag the markets, you had TCS and Infosys among the frontline IT space which were dragging. The HDFC twins were down. Normally these stocks do make a move on expiry day. There was decline in L&T, ITC as well, which was lower. Then, of course, you had Bajaj Finance, which was down 2%. Adani Ports was down 2%. Power Grid, NTPC, Nestle, Sun Pharma. These were some of the names on the downside. On the upside, you had a couple of these commodity names. Hindalco was up 1%. Shree Cement did well. Divi's Labs, after one-way decline, was higher. And Eicher Motors, in a weak market, made a 52-week high and actually closed there. That's telling you something about the relative strength in the automobile space. Even Maruti was looking quite interesting. But the broader market, Prashant, actually didn't do that badly. It looked like more of a index play on expiry.
I mean, although things did worsen quite a bit, Anuj. So when we started at 230, it was 1400 higher, 700 lower. By close, it's 1100 higher and 1050 lower. So the gap narrowed big time. Let me just run through some large gainers. RBL Bank was up another 5.5. It's at 130 now. United Spirits was up 5%, big volumes. BHEL started in the morning, ends up 8%. PNB, of course, has been mentioned here on the show. L&T Finance did well yesterday, another 7% today, 80 rupees. Crompton saw a breakout. Mitesh had it as part of one of his trades, 5.5. IDBI has been strong, 7-8% higher. Time Techno Plus about 9.5% in the green. Kirloskar Engines 10.5% higher. IDFC was up, is at almost about 65, 66 today. Uflex 5.5%, and so on and so forth. Actually, lots of gainers, smaller mid caps and smaller mid caps, which did well on terrific volumes today. Long list, Nigel.
Well, so the series goes to the bulls because we're up more than 500 points on the Nifty, but the day belonged to the bears because we ended with a cut of close to under 100 points. The Nifty Bank was a sore point today. That, from being the big outperformer, was the underperformer by the time we wound up. It ended with a cut of close to 0.5%. And the breadth of the market as well, that was firmly in favor in the number of stocks advancing. Well, both those two lines ahead of the weekend as well, in the couple of days, they said, let's get a little bit closer to each other. We had more than 2,400 stocks that were advancing. By the time we wound up, only around 1,500 stocks were advancing. So that's the way expiry plays out today. Very volatile trading session. Till the final 60 minutes, the bulls had it. The bears snatched it away in the end.